more important than ever. Talking of provocation, I trust some of you will have seen the supplement we brought out in the last few days, our Power 2012 supplement, which is sort of a look at the most influential figures in the industry. There are only 100. There could be 300 or 400. I say provocative because, and makes light of it almost, because sometimes I've heard since we did the first one in the industry a couple of years back, I was wondering whether people are taking a little bit too seriously. And I like to joke and downplay it and make out that it's something just a confection. But in fact, I'm being slightly disingenuous there, because I think as things like the Forbes billionaires list and other powers lists around the world have shown, there is a very real issue at the heart of those things. No, they aren't perhaps particularly about people, the number of ships or the net worth of these people, but they are about the people who turn most heads, or more particularly, who people would most like to do business with, or fearing they'll be on the other end of a deal. So that's the aim of this, to bring out some of that culture, which in shipping is obviously so important. Anyway, just briefly on to the point of why we're here today. This is clearly could be something of a historic turning point, not only for shipping worldwide, but obviously for Greece and Europe with the election here in 10 days' time. Then, of course, at the end of this month, there is the EU oil sanctions against Iran about to kick in, which could have yet more impact that is not yet clear on these markets. This morning we heard from ABS's Chris Wernink about the known knowns, known unknowns, and unknown knowns, etc. And that is clearly the full impact of all those issues are very much unknown, although we know they are looming. So what will come is something that we will is at the heart of what we'll all talk about. I guess it's where do you go from here, whether investment decisions are to be taken, whether there really are opportunities and adversity, as has become a bit of the cliche, or whether it really is just survival at times like this. We're delighted to say we've got in journalistic terms, I'd like to say an all-star lineup. We're delighted to see everybody here. We're honoured and flattered that they are showing their interest in you as an audience, that they wanted to be here. 5 of whom are on the power list. The other 2 or 3 could easily have been on the power list. A couple of people this morning were on it as well. So these are, I would certainly stand up and say these are among the most influential people in this business. So their words, their views, their plans are very important for us all. So if I could hand over to Sylvia, our host for this afternoon, I'd thank you very much. Give her a welcome.
NHST Events and TradeWinds have managed to put together some of shipping's key influence figures. We're very looking forward to have them share with us their insight, concerns, and push them really, really hard for predictions. A very risky thing to do in such a volatile market, because I think expect the unexpected is the only safe prediction. Let's see. So we'll start by introducing our ship owners, justifying the title of our event. And as the savoir-vivre of paneling obliges me, at least in the TV world where I come from, I will greet first Angeliki Fragou, who people refer to as the shipping darling of Wall Street, who really knows the capital markets in and out. Moving to another capital markets guru, George Economou, who has impressed recently with his moves, and quoting this week's TradeWinds front cover, he's the person who dares and wins. Talking about winning, another winner, whether this is shipping or Greek soccer, Evangelos Marinakis, who is constantly a newsmaker, and after having successfully merged 2 affiliated companies, he's now the man behind one of the largest US-listed tanker companies. Passing now to the other side of the Atlantic, although this phrase cannot be appositely used for shipping, which is luckily for us Greeks a global industry, Morten Arjen is admittedly the person who knows both sides of the coin, an ex-banker, and now the head of a shipping conglomerate. Going now to our next star in the panel is Peter Vernink, who is the founder and CEO of Swiss Marine. Peter has the dual capacity of being both a very, very experienced charterer and more recently an owner, taking advantage of the current market opportunities, I assume. Moving on now to other key market players, as well as being the chairman and president of BIMCO, Yudi Katau is also on the board of the Indian National Shipowners Association and on the board of the West of England P&I Club. His company, Varum Shipping, is a private company with a diversified fleet of 20 vessels operating in the LPG, crude, and offshore support sectors. Next is Martin Stopford, until very recently managing director of Clarkson's Research. Allow me to say a fatherly figure of Clarkson's and of the shipping analyst community in general. TradeWinds actually recently reported that he will dedicate his free time in cattle farming. Let's hope that in the next Posidonia in 2014, he will still be around to give us his insight on shipping, and why not, meat quality maybe. Last but not least is George Eliot, the founder of Naftilia Asset Management, who is running the second largest shipping hedge fund involved with publicly listed shipping companies. Some call him Mr. Short, as he made money shorting shipping equities between 2010 and 2011. No wonder why, George. George will set the scene for us from an investor's point of view of what he thinks of the different strategies applied by ship owners. George, the floor is yours.
Thank you. Sylvia, thank you for the introduction. I don't really like being called Mr. Short, but anyway, I would like to thank also TradeWinds for this honor. It's been a great honor to be participating in such a panel. Shipping is one of the most volatile businesses out there. We have seen in the past 10 years rises and falls that some of the older guys here today needed in excess of 20 years to witness. During these days at Posidonia, you will all hear a lot with regards to supply-demand equilibrium, distressed debt, new buildings, etc. I think capital markets view shipping in different ways as well, and the players in this panel are full aware of this. Shipping is a very old business, but with regards to capital markets, it is relatively new. Even though shipping equities and bonds have underperformed, the sector remains on the radar screen of institutional investors. For 4 years after Lehman Brothers collapse, we say that almost 50% of the 120 listed companies that we monitor are theoretically bankrupt. So why are institutional investors still interested? They're interested because they know now that shipping is a leading indicator on a macro level. If you identify shifts in global trade through shipping, you can generate investment ideas. They're also interested because of volatility, and volatility means money to them. It is therefore a deadly combination to run a shipping company which is public and be subject to market sentiment. The players on this panel are certainly extremely capable as they fight with two beasts, shipping and capital markets. It is my honor to be in such a panel. These players are among the winners during these tough times, and I will explain why. Last year at the TradeWinds event, we analyzed the concept of proactive and reactive ship owners. We'll have to expand on this once again today. Proactive ship owners realized that they had to recapitalize their balance sheets immediately after Lehman Brothers, and they raised equity even at a premium to what they were worth, and debt. Proactive ship owners raised substantial amounts of equity post-Lehman, and the most important result from that action, in our opinion, is that they have managed to honor their banking relationships. These are important. Equity investors come and go. And from what we have seen, because shipping is niche, they don't even understand the sector. So let me give you some numbers other than what it is obvious on the websites of these players. I'm sure you can all find their fleets and try to figure out their strategies. Dryships has raised in excess of $3.5 billion after Lehman Brothers. Navios in excess of $3.5 billion after Lehman Brothers. Capital, together with crude, the whole group, close to $1 billion. OSG, 800. Peter, we know you're running a private company, Swiss Marine, which is secretive, but we know also that you've done miracles, so you'll have to share with us some of your strategies. The bottom line is that these people have made clear to their banks that they do whatever they can. So if they were able to raise all this money after Lehman Brothers during the most demanding investment environments, can we all think what they're going to be able to do when things get better? I think that these are the players that will have the ability to have substantial and very important competitive advantages. They will have access to cargoes, earn fees, and hope for a brighter future. Reactive ship owners go through the classic state of denial, protest, and finally acceptance. In the beginning of the crisis, they denied that this is happening to them. They said, I'm rich, I can support this. Later on, they moved into the state of protest. They said, I will play hard game with my bankers and protest. Now they're about to accept the situation and that this is the final stage where they will allow others to solve their problems or dip their own hands deep in their pockets. We were very happy to see only proactive ship owners and players today in this panel. We correctly predicted last year that 2012 and 2013 will be the cleanup years for reactive ship owners. They have run out of time. We're halfway through 2012 and we have seen very important events happening in companies that fail to convince investors and others which are highly distressed. In our opinion, three themes prevail. First, nobody wants to pay any price to buy other people's past problems. The creation of Frontline 2012 solved that problem. I do not have time to analyze what they did, it's public info, but I think it's very important to follow. The second theme is that banks are finally stepping in. We are seeing cases where new shares are issued to lenders, but also to charterers. This is a new benchmark in our opinion. For the first time in public, large companies, interests of lenders, charterers, and shareholders are aligned. The case of Torm, as well as others, is worthwhile monitoring. Finally, the third theme is that private equity players are waking up, but they don't want to get in cheap. But they want to get in cheap. Companies issue to them equity at a discount and expensive debt instruments. The example of double hull is also worthwhile monitoring. It appears that reactive ship owners do the same mistake as governments. The problem is that proactive, successful ship owners are exposed to the mistakes made by policymakers. So how can that be and why it's becoming so relevant? John, just want to show one slide to you. I took that picture at late July 2011 on my trading floor. There was a debate going on. I was saying, what would happen if US defaults? That was an important day of my career, to be honest with you. The question is, have you heard since then anything about this again? The question is no. The answer is no. US policymakers are quick in the process of denial, protest, and acceptance. They accept and react, and sometimes they act decisively as well. In Europe, Germany is about to leave the denial phase. South Europe is in the protest phase. I'm not good at this, but I feel that we're at most 12 months away from the acceptance phase. Now, is this relevant to shipping? I think it is, so we can move on into the next slide. Then, John, then please the next. Okay. The previous debate about whether US is going to default was July 2011. A couple of months afterwards, we had another interesting debate about the, I think that's in April. One more back, please. Okay. That was December 2011. Hard landing set for China. And then by April 2012, we have the short story on China. So clearly, financial media play their role. Chinese policymakers are in the denial phase. Only recently, a couple of weeks ago, they have stopped buying euros, which might show that they're moving into the protest phase. This view is also supported by the way they handle geopolitical issues, but we don't have time to elaborate on this today. So how can even healthy companies raise equity, debt, or convince private equity players to put serious money to work when major financial media quote every single day, and I mean it, it's every single day, negative news on China, the BRICS overall, and the Pacific region? In our opinion, even if there is a slowdown in the growth rate of China, we think that that's healthy. The question is how quickly the Chinese go through the protest of acceptance, through the state of protest and acceptance. In our opinion, the Chinese will make history by going through these phases very quickly. They feel that the West is trying to pass on the crisis to the East. They feel that time approaches where they will have to do something with their currency. But most importantly, we have seen evidence that the Chinese policymakers will open up their capital markets. Since 1986, when International Finance Corporation paved the way to promote capital markets development in less developed countries, many emerging countries have progressed from low-cost manufacturing centers to more diverse, growth-driven economies with a strong consumer base. We believe that this is the new long-term theme for China. Recent market surveys show that 50% of all participants expect emerging markets to deliver strongest returns in the next 5 years. We believe that too. We therefore do not short shipping equities anymore. I mean, what's the point? Those that have problem are close to zero anyway. We favor proactive ship owners, but remain significantly underinvested at this stage. We suggest to proactive, strong ship owners to play safe at this stage, even if opportunities arise, because the stupidity, and excuse my language, of policymakers across the world is extremely hard to predict. The message from capital markets to proactive, strong ship owners is very simple. Keep your balance sheet strong, work on your competitive advantages, build up strategic relationships. When we see policymakers finally entering the acceptance phase, you should take more risk. Believe us, at that point, not many will have the appetite to follow, as the world might look completely different at that time. So anyway, I think that the people on the panel have a lot more interesting things to say than I do, so I'll pass the floor to them. Thank you very much.
Thank you, George. Since George set the picture from an investor's point of view, and since we have in our panel some of the gurus of shipping financial engineering, let me start with a financing-related question, which is a very obvious one. So what do you think? Is shipping an attractive investment at the moment? Martin.
My first Posidonia was in 1984, and I think somebody asked the same question back then, and the correct answer then was, this is the best time we've had in a decade or two to invest in shipping. I think we're in the same spot today. I think that George was absolutely right. You should be cautious and careful, because if you think you have bad politicians in Greece, we have more of them in the United States, and they'll make mistakes. But we're in one of the best opportunity spaces in shipping, commodity shipping, that we've had in, I think, since the mid-'80s. And a lot of fortunes will be made for those that are both smart, hardworking, and take the risk at the right time, the right way.
With the real prospect of a further bank liquidity crunch, what does that mean for you guys, ship owners, to capitalize your business? Where do the money come from? Can private equity, Chinese banks, or even export credit agencies fill in the gap of European banks stepping back and not throwing so much money into the market?
Asking me?
Anyone, George, maybe?
Sure, I can pick it up. I think the banking business is changing a lot. Obviously, everybody in this audience that is in shipping knows that the banking market has contracted substantially, and the requirements are increasing if you add on businesses that were not traditionally shipping, like the offshore, where some of us have entered. So you have to look at different chunks of capital, be it export agencies, be it more equity, other banks. So even there's going to be some mezzanine lending. I foresee that insurance companies will move into the space. So you got to be moving out there trying to find the opportunities to raise the capital, because the banking market is contracting, and I foresee that next year will contract even more.
George, you've always tried to diversify offshore as well. How easy it is to find financing for offshore projects?
Well, it's never easy to convince anybody to give you money. But what helps is to have a strong balance sheet, have a history of performance, and be a big player, which is what basically the banks are looking for. They're looking for big players, core players, solid players.
George, Eliot, you said that equity investors in public shipping companies do not understand the sector. Why is that? They want to invest, but they don't really understand what's happening.
I mean, can you hear me? Yeah. Well, a good example was when the QE3 in US in the third quarter of 2010 was, kicking in. Everybody was hungry for yield, so they were buying high dividend-paying, shipping equities, and these were trading at an extremely high premium to their still value. They really didn't pay any attention to the underlying risk of asset values dropping. So that gave us tremendous and incredible entry point to start shorting the market. Likewise today, because there's no EBITDA, there's no cash flow, there's no dividend, they don't even thinking of buying stocks that are trading at 30, 40, 50% discount to still value. So in our opinion, not many players there do their homework appropriately, and they haven't really understood what's going on in shipping.
So, since June 2010, only 4 companies managed to do an IPO in New York for shipping companies. I mean, when will it be the right time for an IPO again? Predictions? Maybe Angeliki or Evangelos would like to answer, or Pete?
I think nobody knows, but I will say that now the markets are as difficult as and uncertain as in Q4 of 2008 almost. In essence, investors do not like risk. You had German bonds, 2-year bonds at zero, issued at 0%, meaning that they don't care about any yield, and they're off any risk. They don't care about the return on their investment. They care about if they get their money back. Mm-hmm. So in this kind of environment, I don't think you will have an IPO market. You have first to see a return to more normal times. You have to see we have to see that the sovereignty risk in Europe and somehow progress, and then that will precipitate in the entire market. And what we will see after that is first secondary offering of existing companies before you see an IPO market.
Peter, I can see you smiling over there.
We're not the expert in this area, but I guess we're the company who could do an IPO one day. But I don't think it will be in the next few years.
Not very optimistic. 2 words: covenant relaxation. That's what worries many, many people here today. I would like your opinion, and what do you think, whether banks have actually been patient enough towards companies that haven't been able to comply with covenants, and even in cases that maybe they have been patient, things have turned here, and we've seen banks acting as ship owners. To what extent will banks become ship owners or equity holders? Is this the future of shipping, or?
I think we can answer that. The banks have a fiduciary obligation they get money from the people, from the depositors, and they should make good loans. That's their job, conservative loans. And in this time where depositors are all guaranteed by governments, I think that will be a moral hazard if they go and they get this money and they become equity investors in shipping, because in essence the states will guarantee the investment in shipping. But if we move to a more practical issue, there is now assets that they have moved to special units or bad banks, or however you're going to call it. And in that, I think banks should make sure that, and there they have written off the loans, in essence, and you can see that this, in these assets, they have to act prudently as in the past. They will use some industry experts together with them in order, as it is done in the US, in special units, in order to get some of the return back. I mean, at the end of the story, we are at the cyclical business.
Martin, comments? What do you think? Yeah?
Well, I don't think banks, excuse me, ever voluntarily become ship owners, but the job of the banks really is to sit, traditionally, and especially European banks, is to sit between the euro-dollar market and the small ship owner and give them access to these funds. And in order to do that role, one of the things that they've done so competently over the years is to deal with different lost my voice, it's terrible. Deal with different market circumstances. Sorry, but can I just get a drink of water? Yes, right. In order to do that, they actually have to be able to take cycles in their stride, and in the end, they should be able to deal with default and make sure that the default doesn't turn into a write-off. And part of the process of doing that is to keep their customers alive, because they're in a sort of very difficult catch-22 position. If you foreclose on a customer, you push the ship into the market, you immediately force down the prices of ships, whereupon the value of the collateral on the whole of their portfolio goes down. So even those that weren't in default previously are forced into a bad situation. So I think the banks have a very good incentive to temporarily become ship owners in a slightly cosmetic way, and equally I think they're very keen to move out of that when they can by passing the ships on to other customers who can run them for them. So I think this is them doing their job in very difficult circumstances.
Yuri, you agree? I can tell you want to make a comment, or is...
Well, I completely agree with what Dr. Stopford has said, which is that I don't think banks want to become ship owners. I think what's important for a bank is to be able to have the confidence that there is a plan in place, that there is ultimately cash flow. It comes from different sources and different groups, whether there's extra leverage capability, whether there is cash flow from charters. I think banks will really pursue all viable plans before they actually eventually try to foreclose on an asset. I think they've been very patient.
Evangelos Capital is one of the few companies, Greek shipping companies, publicly listed, that continues declaring regularly dividends. Do you believe this policy will continue throughout 2012 and possibly 2013? Since times are quite challenging, it is obviously difficult to predict what's coming next. But do you believe it would make sense to somehow cut down on dividends so as to maintain a larger cash buffer as a safety cushion?
We completed convertible preferred of 140 million at very competitive terms. In this way, we have an extension of 3 years on paying on the non-amortizing period, which enables us to pay the dividend to loan values. And I think that we're in a very strong position for the next 2-3 years to capitalize on the opportunities that they will be coming. And also I wanted to reconfirm that in your previous question that banks have been very cooperative, I think, with a lot of owners who have seen minimum number of auctions, and I think that this will be continuing, even though every year we think that we'll see more ships for sale from banks. I think that banks have been very constructive with most owners, and where they see that the owner tries and is honest and is trying to find the solutions, they have been very supportive. On the other hand, they have option to find a reliable partner so they can minimize their losses.
One of the key things that you are communicating to your investors these days is that you can maintain low OPEX among your peers. And how do you achieve that?
First of all, we have all our technical management and all our management in-house. That creates, so any economies, any savings we have, it goes directly to the bottom line and it benefits our investor. Second, we have a culture of taking care of our cost from the beginning. It's not something that you will start today when the margins are low, but you have to install in your organization from early on. And with that, you're never going to cut on crew. Actually, we have higher cost on crew because we have high retention levels. But it's the economies of scale, the efficient vessel, and having an efficient vessel, that means that you have lower cost. We are now having about 30% below industry average. When the margins were healthy, nobody cared. Today, in the margins we have, this means $2,000 per day per vessel that goes directly to your bottom line, and that makes the company either profitable or you actually can be in losses. So this is something that it is very, very important to us. It's something that until now, I don't think either investors or anyone that cares was concentrating with the margins where they are now is something that becomes important. I can say that in the same slide we had it from day one in our presentation. Nobody paid attention when the rates were at 50,000. When I are 12, everyone pays attention.
Peter, is ship owning something that you'll be doing more as opposed to chartering in the future?
Yes.
Yes. And why is that?
We tend to do deals when we feel they make sense and when there's limited downside and there's a chance to get lucky. Today, we're much more confident about the opportunities in ship owning than we've been for a very long time. So we started buying ships last year, and we will continue to buy ships over the next 1.5 years. There's a fair bit of upside now, as you put.
George Economou, two-tier markets. Will there be any commercial opportunities arising, you think? Do you see actually a two-tier market coming anytime soon, like forming?
There's always been a two-tier market in the tanker sector. Unfortunately, it has not really developed in the bulker sector. It is too fragmented both on the owner side but also on the charter side. And despite what everybody says, there's all these people that will use the older ships. A good example is that the Chinese are using very old ships to carry their own trade, to the detriment of owners that would like to see ships being scrapped at 25 years age. So I don't see that developing there, not in the dry bulk. The tanker, yes, it will continue, and because there's less charters, they will push for younger ships, and thus the older ships will find not a lot of alternatives, and scrapping is one good one.
Do you think cheap ships and flexible designs from shipyard, it is something that is tempting to, like, for ship owners, like taking back ship owners to the yards and ordering ships? Or?
Well, obviously, this is something that will attract owners that have either a lot of cash, have missed the market, or look at only the cost of the vessel. But I think what needs to be a new owner, potential owner, needs to pay a lot of attention is what are the markets going forward. Because you can get a very cheap ship. There's a lot of talk about fuel efficiency. Fuel efficiency in the engines of the order of 3%. So it's basically you get a fuel efficiency because of reduced horsepower, and it's more relevant in the bigger ships, whether it's the Capes or the VLCCs or the containers. But there's got to be a market, because you can order something very cheap and still you will have a very small return on capital. I mean, just to remind you, for the period between 1973 and 2003, the return on total capital employed worldwide was of the order of 7%. And that was not an industry that people wanted to be involved with. That's why there was an underinvestment in the sector. The Greeks have been able, because of the cost, they were cost conscious, because of low capital investments, they were investing in older ships, now they're investing in new ships, and they took advantage, and they were in the play when the markets rose and they made the money. But I think all these things will need to be consideration when you consider investment going forward.
Martin, you think pooling is an attractive option for owners at the moment? Commercial pooling?
I think it has been for a long time attractive for commercial. We operate all our ships in pools, and we have consistently, quarter in, year out, generated a higher return in the pool, a higher TCE. Pools exist so you can deliver a higher time charter equivalent revenue to the owner. And if you can do $1,000, $2,000, or $5,000 a day more like our Panamaxes do, that's an enormous benefit to an owner. And it enables smaller owners, and there's always going to be room for small ship owners to get the benefits of scale. So I think it's very attractive, and we are a big believer in it, and we will continue to be a believer in it.
George Economou, when is the right time to join, and when is the right time to leave commercial pools?
I guess that's up to the individual. No, but if you're a small player, you're certainly going to benefit from the pools because you don't have the critical mass to maximize your earnings. When you become a big owner, then, and that puts it, I would put it at the size of 30 ships and over, then you can possibly try to outperform. Don't forget that, and you're referring to Heidmark, they have built up an organization that over time has shown that they have outperformed all the public companies in the Aframax and the Suezmax pools where they're mostly strong at. So I guess it depends on size.
Martin, if you were to start a shipping company today, where would you put your money?
Well, it's difficult. I think if I had $100 million or $1 billion, I think I'd put the first 25% on cash in a creditworthy bank, because I'd be worried that maybe the nice things that I would like to happen won't happen, and I might end slogging up, really relying on the $2,000 a day saving that Angeliki was talking about. So I'd start with making sure I slept well for a bit. That's the first step. I'd be worried if it's $1 billion. I'd be worried that there's not a lot of liquidity in the second-hand market, not really enough liquidity to buy a decent fleet of ships of the age that I might want. I think I'd like to go for about 5 to 7 years old, because they're nicely pitched in the market. They're not quite on the wrong end with the charterers, and they've got 10 years ahead of them before things get too difficult. So I don't think I'd be able to get that in the second-hand market in enough quantity to do proper deal. So unless someone on the panel had sell me a fleet, I'd have to go to the new building market. And that would worry me a fair bit. But I'm a philosopher, and I believe that the Chinese are going to build ships. So I'd invest in a good broker who would help me to find a decent shipyard in China, and I would play the numbers and get myself a string of ships. And I think I'd probably prefer tankers to bulkers at the moment, despite the rather low trade growth, and I'd go for the medium end of the tanker market, maybe Aframaxes, and if I couldn't do that, I'd probably go and buy a fleet of container ships in Germany. That's my view.
So Yuri, you think we've reached the bottom of the market? In 2010, people were a bit more optimistic in Posidonia than they are today. You think in 2014 they will be even more pessimistic, or? I think
you're asking the wrong question. I think the worry today is not what's the bottom or the top. I think the problem is that we've ended up with an overhang of shipping capacity, which is probably going to keep the returns at a difficult level. I think, I really would, everybody has to worry about costs today, and I think we're in for a decade where prudently you expect we'll get a spike maybe in 2014, but not enough to do much good, and maybe you could be back down again as the next generation of, Chinese ships come in and that sort of thing. So I think prudently you shouldn't say, is this the bottom? You should say, what sort of decade am I going to have to work in this decade? And I think fairly low return.
So Yuri, you want to answer Martin's question?
Well, the way I look at it, clearly from the point of view of optimism, I mean, people feel that, you can't be lower than where we are today. Obviously, there is liquidity constraints, and therefore that is holding people back. Order books have come down. But what is certainly, of concern is the new thresholds, because, now people are looking at it, and rightly so, saying that we want to have, which was the point that was discussed in the earlier panel, that you're getting a cheaper new building capital cost asset, which is going to be more fuel efficient. And people are therefore investing and doing fleet renewals at this point in time. So on one side, you have a situation where freight rates are low, but on the other, you have a clear mindset which says, I can deal with this new freight rate with a cheaper capital cost ship, with a more fuel efficient ship, and therefore long and short is you're adding more steel to the water. So, while one can say that we are near the bottom, but I think, and that's where I agree with Martin, I think we're going to see an era of lower rates, and the question that each ship owner has to now ask is, what is my capital cost matrix on my fleet, combination between new and old, fuel efficient and energy, interest efficient, vis-a-vis an older capital asset price, to be able to deal with this new generation. The easiest question is, I won't buy anything new, but then how are you going to compete with the newer vessel on the water? So I think we're going to see low rates moving forward. We're going to see more steel on the water, and the individual question that each ship owner asks is, how am I going to be able to manage my debt matrix in this new era?
Okay. So allow me to ask two Greek shipping related questions. First one is, can Greece maintain global dominance? Do you expect any major shifts in the Greek market share now that shipping is moving towards the east? And that's an open question. Anyone would like to answer? Martin?
We just hired 29 or 30 more people here in Greece, and Athens is now going to be OSG's biggest office. We'll operate close to 80 ships here out of Greece. We moved here because it has the most enormous pool of talented people for the shipping industry in the world, even more than Norway, and certainly more than the United States. I think you have the best educated, smartest people in the country going into shipping. I think that'll continue for our generation. I think you'll see Greeks take advantage of this weak markets we're in now. So I think Greeks will continue to be a critical and big player in the shipping world, and we're delighted that we're going to be doing it. I have to answer though, Martin. Martin came up and gave a 10-year prediction here, and I just have to say one thing. I respect Martin as much as anybody in the shipping industry. Nobody can predict the shipping markets for 10 years. 5 years, 3 years, maybe 2 years. And if everybody is pessimistic, he knows that if everybody is that pessimistic, the market turn is going to be much more imminent. Sorry, Martin.
Well, I didn't really make a prediction. What I think the right way to approach it, Morten, is that you first secure yourself. If you're in alien territory, first thing you do is make your door at night very safe so someone doesn't break in and take your company over. And then when you've done that, you look at how you build the best business you can in that environment. And I think a good starting point and a sensible starting point with the shipbuilding industry that last year delivered 162 million tons of ships, which was more than it delivered in the year before. I think that's something that won't go away very quickly, and therefore I would want to protect myself. So it's not really a matter of making a prediction. It's saying, here's a scenario that really can happen, Morten, and you should start to prepare to protect your investors from it. That's my view.
Can I respond one more way to him, and then I'll stop?
Please.
The conclusion he drew was, with all that, you order new buildings, eco ships. And I think that is one of the biggest farces. We've been subsidizing the oil industry for 4 years now. Now we're asked to subsidize the shipbuilding and the shipbroking industry, building ships that the world doesn't need to provide fuel-efficient benefits that are mostly on paper and may not work in practice. At the end of the day, you can get much lower capital cost ships, as George suggested, in the second-hand market, and that'll wipe away that $1,000 or $1,500 advantage you might get while your ship is trading. Because keep in mind, ships aren't always steaming. They wait, they discharge, they load. So, and that's my final answer to Martin.
I think one.
Come back, not now.
I think that we are forgetting that we are in the shipping is free enterprise, it's a capitalist market, so people will do the thing that is best to for their own interest. But one thing to calm both sides is that there is a deleveraging happening around the world. So with no ability really to raise the debt and necessary for that, I think we have a self-correcting mechanism. We have a blessing in disguise on this issue, and also we have fleets that can be very quickly scrapped and fine. To be honest, I don't care very much about the fuel-efficient vessels. There will always be some technological innovation, but as everyone said, I mean, if you go a mile less, you will save a lot of fuel, about 10 tons. So the biggest issue on not having an oversupply is the restriction of debt that is not there, and the long deleveraging cycle we're in. One of, I think, the most competitive advantage for companies is to have alternative ways, not only of equity. Equity is expensive, as we all know, but also of debt. And in debt, you have commercial banks. You can have the insurance companies with a term B loan, but also a very important part of the debt, part of your debt, is to enter in the bond market, where it's a process that will have to take long, because you have to go through a rating agency. It's not like having a loan where you pick up the phone.
And you have to be big. You have to be big to enter in the bond market.
No, it's not big. It's the dedication.
Even small to medium-sized companies can...
A medium-sized company could enter, but you will have to go through a process where you educate rating agencies, then you have to pick the correct time to enter, and then this is an ongoing process. I mean, it's not picking one moment, and you're not going to get your best pricing on the first bond, but having an investor base will give you the opportunity to have a non-amortizing with very low covenants part of your debt.
Back to my Greek shipping-related questions. Oh, yes, please, Yuri.
Sorry, I didn't mean to skip the queue on this one, but I couldn't resist. In terms of the question of what is the future of Greek shipping. And I think, what has been spoken about, very extensively during the course of, the current forum and earlier, is the benefits of being big. And clearly, I don't think there is any debate that there is a benefit of being big. But on the same time, I don't think one should really write off small and medium-sized ship owners. And I think Greece, has a very large percentage of the world's small and medium-sized ship owners, with what Morten said, which is, they're very intelligent. And I think there's a case to be made here for innovation. There's a case to be made here for, customization, specialization. And, if you look at the commodity industries, clearly bulk carriers, tankers, yes. If you're looking at pure scale, if you're looking at operating costs, if you're looking at cost of capital, there is a lot of advantage of being big. But when you look at some of the specialty areas, whether it's offshore, chemicals, gas, etc., I think there are cases to be made for innovation and specialization. And I think if the Greek ship owners, which they are already doing, but if they concentrate on that, I think there's a very strong niche or niches which can be looked at. And I think that's one thing we shouldn't sidestep in the growth to being big.
Vangelis, yes. Vangelis.
We all have short memories. I will bring you a real example. In last Posidonia in 2010, we were all very optimistic. There were major fleet acquisitions, a lot of investment, especially during June 2010. And unfortunately, we don't see these companies that they made this major acquisition around anymore. So I fully agree with Morten that in our business, going back all these years, when there is a lot of pessimism, something good comes. And of course, when everybody of us is extremely happy and optimistic, we have seen some major disasters. Also, the other thing is that I've got my serious doubts as far as the new technology, fuel-efficient vessels are concerned, because we see all these very sexy specifications from various yards. I think that we have to be cautious. We need to wait to see the first deliveries, how these vessels will perform over a year in rough seas, not in perfect weather conditions. And of course, the classifications will have to stand by and do extensive researches and see if what we see on paper, we can realize it in the real world. So, and also the last thing is that as an industry, we need to solve out our problems right now to see how the fleet is reduced, how the vessels can perform in the best possible way, and then talk about new buildings and new technologies. Of course, we'll consider all this, but step by step.
Peter?
A couple of things. Firstly, the worse the market will be over the next 1.5 years, which we tend to believe in, the stronger recovery will be for many reasons. You have more scrap, you have less orders, etc. So the worse the market will be, the stronger a recovery will be. Secondly, fuel efficiency. We have about 150 ships on period charter. The one and only thing we look at when we take new ships on period charter is what do they actually do? What do sisters do? What is their fuel efficiency? So it is the key driver for how much you will earn in this market at the moment. Orders will be placed for new entrants. It doesn't matter whether you have all sunk costs. New entrants will place orders because the economics look good for what you are promised. So that will continue to happen, but to a limited extent in this environment.
But we have to say that, in essence, nobody has a crystal ball to know if it's a year and a half or how long will be the downturn or when will be the recovery. I think the most important, and I will agree with some of the panelists, is to make an investment in today's environment with today's cash flows. And if that makes sense, you'll have an upside later on. So have a conservative balance sheet, have liquidity to make sure you survive, and make an investment that makes sense today. If it makes sense today, you'll be extremely happy later on.
So my final question before I open it up to you guys, is it possible to combine the traditions of Greek shipping that have made it what it is today with the need for management skills for a fast-paced world, capital market expertise, long-term funding?
I can comment on that. We have many ships on charter forward. We see from that the problems with the owners we work with don't tend to be in Greece. They tend to be elsewhere. Most of the Greek owners we work with tend to be doing okay. And they seem to manage to handle this market perfectly well.
Okay.
So in that sense, the role of Greek ship owners should increase, not decrease, because a lot of the problems are elsewhere.
So I would like now to open up to you guys. Please keep it short, ask questions, make your views heard, and always identify yourselves, name and company you're working for. Yes, please. Here.
Very corporate 35,000 mile view on the industry and the industry operations, but I'm going to ask you to drill down a little bit. And while we spoke briefly about eco ships, I'd like to talk or get your views on how increased regulation, environmental regulation, is impacting your operations, how you're going to be dealing with, for those of you trading to the United States, the upcoming August implementation of a 200-mile emissions control area, and how you're managing, particularly the public companies, how you're managing to satisfy your shareholders yet sustain and maintain your vessels, your crews, and accommodate all the requirements you have in place for operating your vessels. Because it comes into OPEX. You're looking for places to cut. And for those of us on this side of the podium, we're hoping that that's not an area where we're going to be seeing cuts.
I want to remind the audience that the industry has adapted to more expensive regulations that came in effect, be it the transition from single hull to double hull, the inert gas systems, and so on and so forth. I think we have gone a little bit too far in asking too much of the ship owners, ballast water treatment, a little bit too much. Too expensive an investment for very little saving, but it is what it is. We will adapt. And you adapt by being proactive, by knowing when the regulations will be in effect, whether it is on new buildings that you have to plan ahead, partly at least, installation, maybe not up to the final product, but you can be prepared for it. So the industry does adapt, but I think the regulators should also be a little bit more cautious in what they ask. Yes, the emissions is a valid point. You want to limit the emissions, and so do we. And everybody's doing that. The water ballast treatments, I think there needs to be a little bit more thought. But the industry has adapted, so it's not as major and expensive as it was in the past. It's unfortunate that we are talking about it when the market is low, but the market hopefully will not stay low forever.
Here in front.
Thank you. Skonil Bimgo. I have one specific question to Martin. Martin, when you and I met each other first time in your Chase Manhattan times, we were facing, as an industry, a lot of issues at that time as well. Chase and Bank of America, particularly South America, and all the collapses in the South American economies. What is so different today from the previous crises we've seen, and why shouldn't the industry not be able to self-regulate as it's done time upon time? What's the difference?
Well, it's a very, very interesting question, because at that time, the American banks were under a lot of pressure. Citibank was almost bankrupt. And, in fact, they did, the Fed went in, and since then, the American banks haven't really used their balance sheets very much at all. I mean, they've been there, and I think Morton might have a few thoughts about that, since you were actually there in the hot seat. But what happened was that a whole bunch of new banks came in, Sorry about this. It's, you know, I shouldn't have had those extra drinks at the Allen Club last night. But it was good. I enjoyed it. I think what happened then was a new range of banks came in and filled the gap. What Robin Dass said this morning was that he, for the first time, and he's another man who's been around the banking industry very much hands-on recently, he was the first time worried that the European banks might not be there or won't be there. And I must say that seems a new situation, because we've talked a lot about the medium-sized companies. And I mean, Greek medium-sized owners own ships worth $35 billion. They probably are used to having $20 billion worth of debt that they got very conveniently from Dutch, German banks, and that really allowed them to leverage their business. That if that isn't there, then we're back to cash. And I think that that's a scenario that maybe to answer your question specifically, Torben, you know, the Asian banks don't quite seem there at the moment to fill the gap that the European banks seem to be leaving. So I'm a little bit concerned about that one. I don't know, Morten, you have a much... Please, no?
Back to the 80s, and I was then running the global shipping group for Manning Henning, which was a workout group. In the mid-80s, the American banks still had Glass-Steagall, so you had separation of investment and commercial banking. So the banks were lending money to ship owners and keeping it on their books, the same way European banks have, and largely the way most Asian banks have the relationships today. Flash forward 20 years, and the American banks no longer own that asset. They didn't own mortgages, they didn't own shipping loans. The bond was broken. And I think that is a fundamental change. If you go back to the mid-80s, the shipping companies were much more insolvent. The C.Y. Tung Group, when it got into its problems in 1984, had a negative net worth of $3 billion. And now the family is worth double that, because the banks had a direct ownership with the group. Same thing with Bill Willemsen, now a very successful company, Leif Berg. The banks held the loans. They made reasoned decisions. They fixed them. When you went to, you know, everything is just a fee to get it off your books. You break the bond between the bank and the shipping industry. I think we'll go back to that. I think the deleveraging that's happening in the world will require that banks hold things. In America, for home mortgages, the Fed is going to make banks hold mortgages on their books. And that's going to make it a lot more healthy than when everything's being sold and you break the bond.
Like a guru like Martin. Martin, do you think that this over-regulation emanating from various administrations like the American administration, the British and others, will make the cost of the ships too high? And that will be detrimental for the private enterprise to run, and that suggests to me we're leading back to national fleets. It's too many costs, piracy on. I mean, you know, it's too many regulations. Mr. Marinakis correctly said also another aspect of the advancing technology, which people have to check. You know, and must digest. It's too fast. You know, so in a nutshell, do you think we're leading back to national fleets? And B, is technology compatible with digesting same and same to be, you know, given to the seafarers and the investors, etc.?
I think that what we're seeing is the regulators moving from slightly theoretical territory into very physical and operational territory. And that's something that's been going on for 20 years. And I think, I forget who mentioned the double-hull tanker example, but I really think, you know, for all the talk about double-hull tankers, the industry managed the phase-out of single-hull tankers extremely well. There was a lot of worry that ships of 15 years old would be sent to the scrapyard, but in the end, really all the tankers went to their full age or they got sold for conversion. And it was a very nice, neat, straight line. And that leaves me with a lot of confidence that my practical colleagues on the panel here are going to do a really good job in sorting this one out. I think as an analyst who goes and talks to a lot of people, what I do see today is that these regulations are facing ship owners with some quite unwelcome choices. I mean, if you've got to decide whether you fit a scrubber or whether you just rely on being able to get gas oil. And this, you've got to decide whether, if you order a new ship, do you go for a Kamsomex with an eco package, and if so, will the yard be able to deliver it, and will it really deliver what it wants? I think this has added a complex physical dimension to decisions, which probably wasn't there, certainly wasn't there in 2007 when you just took what the shipbuilder offered you, you know. So I think it's created a tough set of extra things to worry about, you know. But it takes your mind off the oversupply. That's good.
George?
I'm a little bit worried that we're living in days that everyone feels that maybe the world falls apart, that everything is so fragile around us on a global scale, and we're talking about regulations and fuel efficiency. I think that people involved in shipping, they need to be aware of macro issues that are, that the world is facing, which I think that will certainly prevail in the next 12 months. And this will dictate, in our opinion, the way to go forward. You may be talking about regulations, fuel efficiency and everything, but, you know, probably half or even more of the banking system in Europe is bankrupt. So, you know, I think we need to be a little bit more pragmatic and realize what's going around here. I mean, sorry for that, but we've heard like 20 questions about the regulations.
No, I think, you know, George is right, and you need to focus on what you have, security what you have. And we talked about shipping a lot, but, you know, there's other sectors, and you have to reinvent yourself in many ways in your investment decisions, in your strategic decisions, in your operating experiences. You know, for those that are interested in trying to reinvent themselves, there's plenty of things to do. If shipping is not good, you move out. I mean, it's not easy, and it's not easy if you have scale, but you can do it. And you can do it in many ways.
Questions?
I think this
name, please.
Manolis Bordonis is my name. I think this reinventing word was very useful. And I was thinking, how can we reinvent ourselves now that these smart and hardworking young investors will have to go and find Martin in the green fields of England to ask the question, when and where, Martin? And his cows will say, go away. So where shall we find the input for right time and right investment? That's one input making me respond to the reinventing. The second input is that after my 40 years in my shipping home, ship transporters work, I was used to look at shipping as a fence around us. Now that I'm a few months away from my shipping duties, I tend not to get angry, but to understand more the AAA charter who cannot pay the rate, understand more the frustration of the banker who financed a very high value ship and now the value is low, understand more the frustration of Chinese government, which is all these investments for shipyards not being able to flourish. And the question for reinventing and innovation, to you more practical businessmen, do you think that we are going into a new era that traditional business transactions and traditional contracting is not adequate anymore to create sustainability and continuation of the businesses in these tectonic changes? I mean, do we need to go into more advanced relationships building between all the stakeholders so that we create businesses who are not Martin Stopford prediction related, but are sustainable physically, because in the structure of the business, who have incorporated the synergic, sustainable, non-erosion physical terms who will keep the business running even if the markets collapse.
Part of the question was kind of long. Well, when I mean reinventing, you have to put on the head of an investor. We're talking about the Shipowners Forum. I understand that, and we're talking about shipping. Maybe that's not the place to superanalyze. Like superanalyzing may lead to paralysis. So you have to look outside shipping. We went into the offshore. Your ex-company has gone to the LNG, and so have others. There's plenty in the offshore sector for Greeks to go at it. I mean, the Norwegians have done it. They see the opportunity with the margins. We had an offshore panel in this morning, and I said the margins in the oil industry are anywhere, depending on what you look at, what company, in what sector, 30 to 50, 60%. The margins in shipping are not that much. So that's what I meant. Look elsewhere. Okay, once you're in it, you have to see how you fare in the situation you're in. But there's always other things to look into. And it doesn't have to be shipping, and it doesn't have to be offshore. It can be anything else. But because ship owners probably are not the gurus of other industries, then I think the offshore is a good example that has many, 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 many years ahead of good returns.
We are in a shipping panel, and I agree that offshore can be a very profitable business, but shipping is something that will exist for tomorrow. I mean, you have a very important trends. You have 7 billion people, and actually the majority now is in Asia, and there's macro trends that will show that in the dry bulk, you will have a good market in the longer term. Of course, short to medium term, you will always have uncertainty, and shipping is about uncertainties and how you manage the downside. In the longer term, we always have managed with innovation and much bigger technical innovations, and this time around we'll have to also see financial innovations. So I fully agree there can be a lot of other investments, but shipping can be an extremely profitable business if you manage your downside.
Yes, please.
Yes, the reinvention process, we perceive it as the idea generation process. There are things that are happening in the world, and people need to listen to the markets. For example, the longer-term investment theme in China when it entered the WTO was to become a low-cost manufacturing center and open up to the trade community, etc. So we're seeing now if they open up capital markets, they're going to change themselves from a low-cost manufacturing into a strong consumer-based center. So that is a very important structural shift in global trade, in our opinion. So people need to think long-term, believe in their vision, and try to reinvent through that process. I mean, receive influence from other things that are happening in the market.
James Law Firm. We talked about banks being patient. What about chartering relationship? We've seen several owners that have not been flexible at all and actually waiting till companies reach literally the verge of a cliff before they can actually make some concessions. I was wondering what you've seen from your experience in practice. I mean, I guess Mr. Vernink would be definitely appropriate to answer, and then some of the rest of the owners as well. Thank you.
What is the question exactly of chartering relationship? Sorry.
Whether you've seen owners being actually flexible in renegotiating charter the freights where they have been agreeing at very good times, and now obviously the charters cannot actually sustain that, and whether you see in these type of relationships, commercial deals being struck, or actually saying, no guys, let the banks take the first hit, then we'll come first afterwards. Where do you see this relationship coming in?
Well, we're mainly a charterer.
I know. That's why I'm just saying. I'm just saying what you've seen from owner's side.
Yeah, we've not been in a situation that we either wanted to renegotiate or needed to. With our customers, there's always a continuous process of people who don't want to move a cargo to this year, but they want to move it next year. In general, you find solutions for that, as do most of our competitors. At times, the charterer pays. At times, you restructure, you add cargoes, etc. There's all the traditional ways you deal with that, and they have not changed over time. Are rates being negotiated out there, and are adjustments made? Yes. And some people take a different attitude than others in that. But there's no general line you can put on that. It is sometimes surprising how long people continue, and I always find it surprising that people who do renegotiate, they manage to get the ship on period again a year or 2 years later. I find it amazing. One thing which surprises me in this market is tough to get the information out there of how much is actually going on with that.
Who wants to ask the last question?
I would like to ask how you feel that we continue to follow the paper market than the physical market concerning hires and trading of the vessels. I mean, we look at China, how it grows and imports things, but we stick following the paper market. Shouldn't we continue doing this? I don't know. I would like to hear your. What do you think?
Physical, because it's an easy tool for us to hedge. EA, what we can pay every day is related to what we can sell. One thing we can sell every day is paper. Contracts, they're not there every day. So it's a tool we use to create liquidity in the market, which is to a large extent what operators like us do. Is there a problem with that today? Yes. The single biggest market in the dry bulk, which is Brazil, is about 50-60% of shipments, is not effectively in the index. So clearly the difference between the FFAs and what we can pay on physical ships and the risks of trading that increase. So in that extent, there are periods when paper is less leading on the physical market. On the other hand, we don't have a better instrument right now, so we continue to use it. The Baltic will be adding a new route, which will improve the situation somewhat, and will at least get the Brazil route, the Brazil's China route into the 40C, or hopefully a 50C soon. And that will make that paper will continue to play a very large role in the dry bulk market, simply because it's a liquid and a fast tool, which allows us to lay off risk.
Julian, last question. Mike here, please. Yeah. Can you open up here?
Excuse me. Thanks there. Just one final question. We've had a fantastic discussion this afternoon, and I appreciate the time everyone spent, and particularly the panelists for the candour of their views. Focused obviously on the business, but just in conclusion, just to maybe round it all nicely off, and going back to this issue, which is so very powerful in shipping, this one of a character, personality, and charisma even. I just wanted to quickly just run straight down the panel. Maybe I could throw this at Martin to start off with. Let's be unfair. And the question is a simple one. Could you name the greatest influence, or even mentor, to be slightly more highfalutin about it, from whom you've learnt most about the industry and how you've conducted business over the years? And they haven't been prompted on this, by the way, folks, so thank you very much.
If I can get it out, I think I would say simply Offer. Yeah. I think he always said to me that the Offer group has a very great capability to be versatile, to keep very good people, to build the fleet, and also to deal very well with the sort of difficult things that come along in the market, but most of all very professional. I think it's been a very good, and I've enjoyed watching them over the years and seeing how they've dealt with the different markets and moved so versatile. You know, they have moved into many different sectors with great success.
For me, I think the biggest teacher has been the market itself. All our expectations of the market, you talk about black swans, we've seen them all. So I think the market itself has been a great teacher, and we've just had to innovate individually, looking at different opportunities to try to survive that.
Evangelos?
There are a number of people that over the years I have followed what they have been doing, but I think that the the difference was made when I was inspired. And when you are inspired and you can think with a clear mind and you can think aggressively and you can be creative, I think that this has to do with the persons that have nothing to do with shipping. Can be when a woman that you can feel in love, also can be a sunset or a very nice week. So that's what I can say that inspired me to make the difference. Or my team, football team.
Very good answer. Angeliki?
I think there's a lot of people that have influenced me over the years, from the education I have taken to a lot of the professionals I've been working with. And of course, inevitably from my father, which was a very knowledgeable person in shipping and has brought it in my DNA somehow.
Peter?
I've learned from many people over time, but one I would mention is Bill Bose, who used to be my boss in Cargill and taught me a lot of the trading. What worries me most is that he's left shipping and he's reinvented himself as an inventor, like Mark Martin, in agricultural land in the UK.
George?
Well, I don't have a shipping background, so I think that Mark Mobius from Templeton, who's one of the pioneers in asset management in emerging markets, he entered like 25 years ago. He goes very niche. He analyzes companies in tremendous depth, and he really goes into the psychology of the management as well. So I'm a true follower. But what is inspiring for us is to, and for me again, it's a great honor to participate in this panel, because I'm in between self-made millionaires, billionaires that started their companies from scratch. People on this panel have the choice to sit and do nothing and just manage the money that their families made already for them. But nevertheless, they continue to work hard. They penetrated tough capital markets, and they certainly achieved tremendous things in a very tough environment. So the people on this panel are also very inspiring for us as well. Thank you.
George, economic?
I think inspiration is a matter of age and where you are in your development process. Before I became a ship owner, I was inspired by the company I worked for, Thenamara Ships Management. Thereafter, you look at different groups, different ways. You have the public markets, John Fredrickson, you have the private market, Sami Offer, you have the big corporates, AP Moller Maersk. As we move on, I think, you have to decide what hat you put on, the entrepreneur or the investor. The investor, you said Mark Mobius, everybody knows Warren Buffett. But as an entrepreneur and as a person that identified most with his company, the last inspiration has been Steve Jobs.
Steve Jobs. Morgan?
If I look back, I got to work with a Norwegian named Christian Gerhard Jepsen, who built, among other things, Gearbolt. And he worked 7 days a week. He cared about the people that worked for him. He cared about the people on the ships. His word was absolutely worth everything. He believed in building competitive advantage and being careful with the balance sheet. He died typing a telex, typing an email after returning from a business trip when he was in his late 70s, and he left a legacy. And I always thought, if one day I could be a ship owner or a CEO, if I could do it half as well as he did, I'd be pretty happy. Still working towards that.
Okay, thank you all. Now I would like to invite all of you to the most interesting part of the event, which is food, drinks, and shipping chit-chat outside. Thank you all. A big applause to the panel, please.